Welcome back. You're still tuned into Midcap Radar on CNBC-TV18. Well, India Pesticides, that's the stock on our radar today. The stock is down around 19% this year so far. We have a lot of updates coming in. There's a lot of stuff happening in the agrochemical space, in the export markets as well. So to discuss this, the business momentum and the outlook going forward as well, we are now joined by the CFO of the company, Satya Prakash Gupta, to discuss just that. Mr. Gupta, good afternoon. Thanks a lot for joining us. I wanted to understand your margin outlook from here on, because in the second quarter, you did see a sharp decline in margins at 22%. And you spoke about how raw material prices, logistical issues are impacting the margin picture of the company. We are in an environment where everyone's talking about lower raw material prices now. At least they've started coming off the peak. In that case, what does the rest of the year look like in terms of margins for you?
Madam, margins have rationalized due to increase in operating costs and fuel costs and carryover of higher inventory. So during first half, we have achieved EBITDA margin of 24%. We expect that in second half, we will be achieving the similar margin. But we are expecting the raw material price to decline and inflationary pressure to ease off. It will result in increasing EBITDA margin in next year and in subsequent years.
How much would that increase by? You said 24% in the second half. You've done 24% in the first half. If you're talking about improvement, last year you were sitting at 33%. Will you be able to do that?
No, now the margins have rationalized. Since even currently the fuel cost and raw material cost, they have not gone to that level achieved in earlier year. Currently, we are doing a lot of products and the products are under stabilization phase. So it will take some time to get improvement of EBITDA margin from here.
Okay. So you have an equal dependence on the domestic and the export market. It's roughly 50% exposure, or in terms of a revenue contribution. A lot of the companies have indicated pressure on the export front. What has been the situation for you? Which are the key countries, the geographies that you export to, and any signs of pressure?
We are mainly exporting to Australia and European Union. Agriculture is an essential thing, so we do not see any effect due to recession. However, there has been some extreme weather condition in part of Europe. This may impact slightly, but we have not received any order cancellation till date. So our export is growing at a very healthy pace.
Okay, so what kind of growth do you expect in export markets on the back of this? Also considering that you have exposure to Europe, and that is where we are seeing a lot of action happening on the negative side right now.
Last year, our export was, I think, around 43%. Current year, our export will be around 49%. And our revenue has also increased 30%. So I think our export will increase by at least 40% during current financial year.
Okay. So you also have a lot of capex plans. I think a 70 crore capex for expansion at your Hardoi plant. You've also got some capacity which will get added at the Sandila plant. What is the current capacity utilization? Given the demand right now, when do you think you will be able to utilize the incremental capacity that you're adding on? Just some color on this.
The current capacity utilization is around 77%. Our installed capacity has increased from 21,500 in financial year 22 to 23,500 in first half. We are further adding capacity of around 4,000 tons in second half of our current year. Our capex budget for this year is 70 crore. And we expect we have to implement 2 plants, one for herbicide and one for intermediate in next half. We are seeing a good demand traction for new products also.
Okay.
So we are quite hopeful to achieve good volume growth in next year also.
So can you give us just a rough ballpark number with these expansions and increased capacities coming in? What kind of revenue addition will these new products and new capacities bring overall?
Madam, we have achieved revenue growth of more than 30% in first half. We are expecting revenue growth of around 30% in current financial year. And next year also, we are expecting revenue growth of more than 25%. We are getting a lot of inquiries from new MNCs, and a lot of companies, they are visiting our facility to find if we can produce some molecule for them.
Oh.
So we are seeing a good revenue visibility for our operations.
So 30% growth in FY23, more than 25% growth in FY24. I also wanted to understand what is the margin difference between technicals plus API versus formulations, and in the future the 79 to 21% revenue contribution, will this also change for you?
Our margins in technical and API segment is slightly higher as compared to margins in formulation segment. And we are consistently achieving more than 75% turnover from technicals and around 25% in formulation. Our formulation business will also grow in same ratio. So this ratio will remain constant in future also.
Okay. And last question before we let you go, what is your R&D expenditure as a percentage of revenue? So will you plan to increase it from here on? Because a lot of chemical companies are putting more capex on R&D as well.
Madam, we have got two R&D lab that has been recognized by DSIR, Government of India. We are spending around more than 10 crore on R&D, and we have recruited a number of scientists. So we will be increasing expenditure on R&D as per our requirement of new products and projects.
Okay, so we leave it at that. Thank you very much for joining in. That's India Pesticides for you. By the way, take a look at Prism John.